Welcome back to the Eric Krown Crypto channel, wishing you a happy healthy start to this last day of 2023. Now, of course, the real trading year ended realistically a couple weeks ago, but yesterday, or today, I suppose, now we have the official yearly closes for all traditional markets and, of course, CME Bitcoin as well. Other than that, I want to be following up on some very high time frame ideas on this particular video, talking, the next 3 to 6 months. So basically into Q2 of 2023. And what else? Yes, I should also let you know that if you're interested in any one of the programs or products on the Krown Trading application, well, please, I humbly request that you just wait. You just wait like a little bit less than 24 hours and we'll actually be having a sale, so you can save yourself a few bucks for the next week to kind of start off the new year. All right, sweet. So other than that, let's just jump right on into it. I want to start off today's analysis with Dixie, the dollar index, on the quarterly time frame. So very, very high term time frame here, but a few things right off the bat that are very, very interesting. So first and foremost, what do we have? Well, we do have a closure below the last quarterly low, and in this case, it does seem to be forming a nice local high on the quarterly time frame. That is going to be accompanied by hidden bearish divergence between the highs of 2001 and the highs that we're experiencing right here in 2022. And so what essentially defines that? Well, of course, lower highs on price action alongside higher highs on the RSI oscillator. Now, that is going to give a bias for this year to kind of open up on a pullback. And when we're looking at a quarterly, we're talking about like the next 3 months. So realistically, that could be anytime between January and March, essentially. So if we go down into the monthly and kind of pinpoint this a little bit more, we can see very clearly on the monthly a few things of interest. First and foremost, the monthly did close on the lows. All bounces were denied, and we also do see some regular bearish divergence between the highs of 2015 and the highs that we're experiencing in 2022 here. So that would likely give it a short-term, relative to a monthly, by the way, target somewhere down around about a 101 to 102 region, and probably tries for a bounce there as well. Now, personally speaking, I do think that bounce will be faded, and I do think that we will see a little bit south of $100. Now, I am not necessarily bearish on Dixie. Long term, I think it is still probably bullish, but ultimately, this is going to take a long time for it to kind of sort itself out. So this is going to be accompanied on the monthly by extremes on monthly volatility. And then, of course, the monthly jewel is also getting its first downside signature since in this posturing, in the extreme zones, I should add, since when? Since 2015, which was the last major correction. And before that, do we have any other comparable turn downs in this region? I mean, kind of over here, although this was a slightly weaker move, all things considered. And then we have a few iterations over here that are, I think, mostly comparable. This comes back from the 80s. So in this case, that was this local high over here, obviously was a nice pullback, but things did obviously, march onwards and upwards significantly, you might say, and puts in many drives of bearish evidence on the monthly there. And then we get the real top on that second extreme read. Of course, the next one coming in from here, as you can see, this one, again, short-term pullback, long-term continuation. And this one over here, this one was short-term pullback, a little bit of continuation, but overall choppy. And then what do we have on this current one? Well, probably looking at, again, a short-term pullback, plus maybe some long-term continuation as well. So this one, Dixie that is, can remain in its overall long-term uptrend, essentially as long as it's above $90. That's the last low here, but you'd really not want to see it come down too far below about 93 to 94 bucks for the long-term uptrend to continue to hold. But ultimately, yes, we see that. We see the bearish divergence. We see extremes on volatility. And also, if we go to the 6-month time frame, then we'll see one massive shooting star dildo right here as well, of which that could, and this is like, now we're getting a little bit too far ahead of ourselves right here, but if that does confirm as a local high, which on a higher term time frame like this, I do think that it's okay to kind of be a little bit more aggressive with looking at actual candlesticks, the good old dildos right there, then we can see that, some bearish divergence would actually be forming between the highs of 2016 and, yes, the highs of 2016, basically, which would probably give it, enough oomph to come back down to like the mid 90s, maybe even low 90s. But as of right now, yeah, it does seem that 2023 very likely opens up on a pullback for Dixie. And does that benefit risk on assets? Generally speaking, on the higher term timeframes, it will. There is an inverse correlation, not necessarily on the lower term timeframes, but on the higher term timeframe trend. That does seem to hold to fruition over the course of time. So let's now also reference stochastic momentum. I completely forgot to do that. But 6-month timeframe over here, you can see that the stochastic momentum on the 6-month will actually open up to the downside, or when it opens for the new year, it'll be to the downside still, as it did close below $107.5 basically. And if we go to the monthly, same thing, nose diving below about 111, 112, let's say. And then the quarterly, I believe, will turn down below about 98. So that one's actually still up for right now. Looking a little bit weaker, though, as you can see. Anyways, moving on now, I want to go and reference S&P right here. So this is the full history of S&P going all the way back. Sorry, my eyes like fucking killing me. Anyways, going all the way back to, well, the genesis at 1871, literally fucking 1871. Anyways, what I wanted to talk about here is on the quarterly time frame chart and a few things of interest. So this had to have been like back in April or May of this year, 2022. We were looking at regular bearish divergence on the quarterly here. And, you know, we've got like our first major target of that already played out down to the 21 exponential moving average, as you can see right here. So after a major target like that is hit, typically you are going to get a bounce, and seeing as there is a positive correlation between traditional markets and Bitcoin, again, on the higher term timeframes, on the lower term timeframes, I think that correlation it's there, but it's not as actionable nor interesting, at least in my opinion. But on a time frame like this, you know, do we see that 2023 opens up on a bit of a bounce? Probably yes. I mean, this is a bit of a doji doodle right here, which is a signal of indecision and perhaps even reversal. Obviously, reversal would need to be with a closure back above the wick high of it. And at that point, you know, you probably see a march back up into the mid 4s. But again, this is not a macro bottom call. I want to be very deliberately clear with this. There is a lot of things to be aware of in 2023 and maybe even 2024. And yes, I still think that overall we probably get something like this. Now, this is not drawn to scale. I put out this chart on Twitter, and people are like, "What the fuck, man? It's going to take until 2030. I mean, it might. I don't fucking know. But no, it's not drawn to time scale or like an exact replica, but something like this. So, you know, we're still kind of on it right here. Probably a bit of a bounce. And then, you know, maybe around the midpoint of this next year, or maybe around the end point of this next year, that's when I'd probably be looking for things to come down more, if they are going to be coming down. Anyways, I've also marked off extremes on the quarterly BBWP, again, representing volatility, which we expect extremes on major highs and major lows. That's when we expect, you know, extreme volatility. And as you can see on this past one, you know, this was the high. So that was also kind of playing into, you know, a likely major general market pullback. For reference on this next one over here, basically around the low, as you can see, the lows were put in a little bit before that. That was actually on the extreme volatility. I'm marking it when it actually crosses the moving average there, just to kind of see if you know, where the shift in, or sorry, the change in behavior happens. Obviously that happens right here. Again, same thing basically on this low, same thing close to this high over here, although not necessarily perfectly on it. Theoretically as well, volatility can, you know, it can tail off a little bit more into highs than lows. Like, we expect extreme volatilities on lows almost always. On highs, a little bit less so. Something like this is completely fine. Anyways, I don't know why I marked this one off. Oh, that was for a different analysis, but not relevant towards this. Now we're going all the way back to, you know, 1956. Same thing over here, marking off a major high. Same thing over here, marking off a major low, major high, so on and so forth. Now we're literally in, you know, 1906. Again, major high right there as well. So ultimately, you know, I do think that we found our high for a very long time. Short term, however, very likely does try for a bounce. Again, we are still, you know, operating on like major drives of bearish divergence here, going all the way back, starting with that macro rally in 1998, which was pretty fucking impressive, into the dot-com bubble. Anyways, yes, so we've gotten that. Now I think it's time to reference what I think is probably the most compelling thing for Bitcoin, or it's not most compelling, but it's just the most interesting thing for Bitcoin coming into any new month, and that's going to be the accumulation and distribution indicator over here. If and when this indicator does start to get a positive slope, that is at the point where I will start to entertain the possibilities of definitely, or I shouldn't say definitely, but extremely likely a major low. and perhaps even a macro low. So what am I looking at? Well, throughout the full history of Bitcoin, this indicator has actually been incredibly consistent with calling the major highs and the major lows, especially on the low side, I should say as well. Whenever we get a slope change within the extreme zone of this indicator. So in this case, this slope change from from up to down would kind of mark the highs over here. And from this one on the lows would mark the low, the low going from, downslope to upslope basically. Anyways, as you can see, it's been essentially nosediving the whole way through. There's a little bit of hopium back in October. As you can see, the slope massively reduced in its severity to the downside, but it did not flip to the upside, obviously. So each and every month there's a chance for that to, hold to fruition yet again. I'll just briefly show you, or actually I don't have them marked off on this particular chart. Maybe I have it on this one over here. Yeah, we can just mark it off really, really quickly together. Why not? Some like this, some like this, some like this. And yes, it does need to be below a certain threshold first. But in this case, you can see basically around those lows anyways. This chart a little bit less perfect than the index because it has less history, because you're probably going to bring out, if you were watching over here, you're going to say, hey, but what about this positive slope right here? Yes. If we go to the full history, you can see that's not the same thing. It doesn't actually happen until September 2015. Now, here's the thing. With all of those slope changes, the low was actually basically already in, all of them except for one. That would be the Rona dump. Where it was pretty much in on the actual slope change. But again, when we start to see that slope to the upside, that's at the point where I really do start to look at this market as putting in, again, a major bottom before a major rally. That kind of plays into the analysis in, the first quarter of 2023 that we very likely see a try to the upside from here alongside Dixie, again, coming down a little bit more. But that is not the same thing again as a macro low call. I do think, not best case scenario, but a very plausible scenario would be something like this, where Bitcoin, puts in a major bottom right here, tries to rally up until somewhere around like 30 to 35,000 bucks. Puts in a lower high on the quarterly, on the monthly, which is quite devastating, and then comes back down kind of into this mid to upper teen region. And that's at the point where we get to really find out, is this one truly fucked for a long time, or is this going to actually try for a bottom in here, over the next year or two? Personally speaking, that's actually what I think probably does happen over the next year. Anyways, other than that, I think it's a good place for me to be leaving off on this particular video. So we'll come back tomorrow and see where this indicator has put the new month in at. If the slope again goes to the upside, there might be another wick to the downside. There might be another retest of the current lows, but I'd say very, very likely that the wick low that we saw in November is probably going to be the low for quite some time. And the next major move is to the upside, which does corroborate the story that I'm looking at on many other things that do suggest, more than likely we're going to see a major bounce from here. Again, not a macro low call, but likely a major bounce. Which I'd like to see that next tick first. All right, sweet. So that's going to do it for right now. I want to be wishing you the best as always. Take care, much love, and see you hopefully soon.